Now we would be making notes to the accounts. Point number 1, share capital, shareholders fund. Share capital of H Limited is given to us 20 lakhs, that is 2 lakh equity shares of rupees 10 each. Point number 2, reserves and surplus. Within this point A, general reserve. General reserves are given to us 3 lakhs. We are also given in surplus account balance on 1st January 2017 4 lakhs. In this, we would be adding profits for the current year. We are given 5 lakhs in this. The total of both makes us 9 lakh rupees. In 9 lakh rupees, we would be adding revenue profits of holding company, which we have already found out as 75,000. Hence, the total comes as 9,75,000. The grand total comes as 12,75,000. Point number 3 of notes to the accounts is minority interest, which we have already found out in working notes, which comes as 4,20,000. Working note number 4, short-term borrowings. Bank overdraft. Question says overdraft with the Canara Bank 2 lakhs. Note to the account number 5, trade payables. The additional information gives us bills receivables held by S Limited are all accepted by H Limited. In the question, bill receivable of S Limited is given as 1 lakh. This 1 lakh is mutual owings, hence it would be deducted from the total amounts of bills payable of 1,50,000, which is of H, and 3 lakhs, which is of H. That is, out of 4,50,000, 1 lakh would be deducted. Hence, the total comes as 3,50,000. The additional information says included in the debtors of S Limited a sum of rupees 60,000 owing by H Limited in respect of goods supplied by S Limited. This means H Limited is a debtor of S Limited to the tune of 60,000 and S Limited is a creditor of H Limited to the tune of 60,000. Hence, when the consolidated balance sheet is made, this 60,000 would be subtracted from the combined total of creditors and also from the combined totals of debtors. The next point is tangible assets. In the balance sheet, we are given land and building as 6 lakhs, plant and machinery as 20 lakhs, furnitures and fixtures as 90 lakhs, and 1 lakh for subsidiary company, which would also be added to it. In intangible assets, we would be writing the goodwill we have just found out above. Point number 8, inventories. Our balance sheet gives us inventories 4 lakh for the holding company, which is H Limited, and 7,50,000 for S Limited, which we would be adding. Point number 9, trade receivables. For H Limited, the question already says 1 lakh. For S Limited, we would be adding 2,80,000. And if we remember, we have also subtracted 60,000 of common debt above, which we would also be doing it on the asset side as well. Cash and cash equivalents we would be adding for H Limited and S Limited, which is 10,000 and 15,000. It makes it 25,000 in all. Cash at bank is given to us 1,05,000, which would also be added. In point number 9, we would be writing bills receivable 1 lakh and minus 1 lakh, which we had also done it from the bills payable, which has already been explained. Now we have to make consolidated balance sheet. From all these notes we have already made, we just have to plot the entries and the amounts we have already found out in the notes to the accounts. Share capital, point number 1, notes to the account number 1, 20 lakhs. Reserves and surplus, note to the account point 2, 12,75,000. Minority interest, note number 3, 4,20,000. Short-term borrowings, note number 4, 2 lakhs. Trade payable, note number 5, 5,90,000. The current liabilities total comes as 7,90,000. The total of the liability sides comes as 44,85,000. Intangible assets, note number 6, 27,90,000. Intangible assets, note number 7, that was 95,000. The total 28,85,000. Inventories was note number 8. The amount was 11,50,000. Trade receivable, note number 9, 3,20,000. Cash and cash equivalents, note number 10, 1,30,000. The total comes as 16 lakhs. The total of asset side is 44,85,000, which is exactly equal to the liability side total, which is 44,85,000. Hence, our balance sheet matches.